Over the last 6 years, tax planning has exploded in popularity, which, if I'm honest, I think is a good thing. Influencers, CPAs, and financial planners have been producing boatloads of content to make tax strategy accessible to people just like you. And I love that because more people are thinking proactively about how they manage their taxes instead of waiting till tax season, which I think is a huge win and benefits ultimately you and your family. But in all the excitement, I think we're overlooking one really important point. So in this video, I'm going to walk you through the good, the bad, and the ugly when it comes to tax planning. Because if you're considering a tax plan for this year, there is something that you have to understand first. By the way, my name is Lauren Ballard. I'm a CPA and I have been in the tax space for over 15 years. And over the course of my career, I've helped clients save over $3 million in taxes to date. My desire with this channel is just to share insights with you to help you make better financial decisions and understand the role of taxes, financial planning to make sure that you can achieve your financial goals. When I tell you that I'm really excited about the amount of information that is available online in regards to tax planning and tax strategies, I mean that. Tax planning is one of the highest ROI financial decisions that you can make. When I talk to clients, a lot of times they share that they feel like their CPA is reactive or is inaccessible, or they only hear from them at tax time. They feel like they're guessing. And so this increase in awareness around tax planning shows what's possible. Clients and individuals that I'm speaking to are saying that they want that. They want to hear from their tax professional. They want to make sure that they're making the right decisions. And I want to support you in doing that. So that's why I love that there is such an abundance of information in regards to what you can do. 5-6 years ago, it was hard to find information on what was the Augusta rule, or we're not really talking about the short-term rental loophole. All of those things have opened up a world of opportunity for people just like yourself. The other thing that I really love about tax planning is that it creates cash flow. As I said previously, it is one of the highest ROI financial decisions that you can make. And so being able to add additional cash flow into your business is a huge opportunity. From that perspective, tax planning is a win. And I don't want you to leave this video thinking that it's not something that is beneficial for you to do. It absolutely is, but it has to be done in the proper context. Let's move to the bad in regards to tax planning. Tax plans inherently ask the question, what can I do this year to lower my tax bill? But the problem with that is most financial decisions and the goals that you have are not just for this year. You have things that you want to do in the next 3 to 5 to 7 years. And tax plan just doesn't operate in that context. Because tax laws change, circumstances change, treatments change, and so by nature, a tax plan has to be flexible. That's a great thing because you can continue to engage with your tax professional to get insights and questions answered. But you have to remember that it does not just exist. It's not a part of an overall ecosystem. A tax plan exists for the year and has to be revisited annually. When I started my career, I worked at one of the large accounting firms, and I saw this happen every single year. We would be working with multinational companies, and we would do the tax work, the tax compliance, and we would still be on that client all year long. Why? Because we had to continually evaluate the tax position of the business. And so there is a place for that. But if tax planning was a set and forget it, there would be no need for continual oversight for those large companies. Similarly, there would not be need for continual oversight for you and for your family. But because of the short shelf life of a tax plan, it is not the best financial tool. Your tax professional, your CPA, is going to get the information, but all of it, as I said, changes and becomes out of date very quickly. And ultimately, I think this goes without saying, but I want to just be clear that a tax plan answers one question only: how can I save money on taxes? It does not address where the savings goes. It does not address what type of investments you should make with the savings. It does not address whether or not you should pay off debts. It doesn't address should you retire or should you stay in business. It doesn't address whether you should buy a business. It simply addresses, based on what I'm projected to do this year, do I have a plan to make sure that my tax bill is managed? All of those questions, while important, are simply outside of the scope of a tax plan. So with that in mind, let's transition to the ugly. And I think that this does not get enough discussion in this space when people are looking for information on tax plans. Should they get a tax plan? Does this work for them, etc.? Depending on the strategies that you select, there may be an unwinding or a reversal of the tax strategy that you put in place. So let me give an example. One of the things that you hear online a lot is real estate. So if you were to buy a piece of real estate and do something called a cost segregation, you are able to take a bunch of deductions in the current year. When you do that, you get a write-off in 2026, but when you sell the property, you now have to pay tax on the benefit that you receive from taking the depreciation. In my world, that's something called a tax deferral. If we don't plan for tax deferrals, the tax strategy that we have in place now could cost us more than we're anticipating in the future. I have gone to trainings with other tax professionals where the question was raised, well, what am I supposed to do when somebody asks about, well, how does this impact me in the future? And the response was, we deal with it when we get there. To me, that's irresponsible. And I think that it's important for you to understand that unless you are working with somebody who is not just looking at the right now impact of your tax plan, but also the overall impact of your tax plan, that is going to be the treatment. We'll just deal with that later. And that's very scary. There are certain strategies. For example, you may have heard of something like equipment leasing or GFX trading. People use these different strategies to generate losses in the current year, but both of them have an unwinding or a reversal of that strategy that can create a tax burden later down the line. From my perspective, tax plan is great. It is a fantastic tool to put more money back into your pocket, but that shouldn't be the end all be all. A tax plan should put more money in your pocket so that you can then use that money to further your financial goals. As I'm working with clients, I view the tax savings as capital. It is an opportunity for you to redirect money that you were going to pay to the government to actually accomplish the things that you want to accomplish for yourself and for your family. So I hope the information that I've shared in this video thus far is helpful. And I want you to understand that the next time you're considering a tax plan, I don't want you to ask, how much tax will this save me? I want you to ask instead, will this strategy move me closer to my financial goals? Those are two very different questions. Now that we've identified what a good tax plan is and what it does and what it should help you accomplish, the next question that should come up in your mind is, how do I actually evaluate a tax strategy to make sure that it works for me? So in the next video, I'll show you the exact framework that I use to recommend tax strategies to my clients. If you're interested in that, click the link right here.